Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about MULN Automotive, Sofi Technologies, and Tesla. In the first article we will be analyzing, it's titled MULN Stock Alert, MULN Surges on Deal with Lawrence Harge. So we'll be going over their latest news updates and if I have changed my mind on this particular company. After that, we'll be talking about the good and bad news surrounding Sofi Technologies right now and how some people believe the company will drop below $5, and that's going to make a great buying opportunity for this overall stock. So we'll be discussing if I agree or disagree with them and what their proof is for this particular claim. And then lastly, we'll talk about Tesla's TSLA shares and how Cathie Wood has increased her overall price target to $2,000. Clearly, she sees huge upside potential for this company, so we'll be going over on what Cathie Wood is buying and selling and why she thinks Tesla could achieve this phenomenal price target. So for more videos just like this one on the latest news updates, remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. If you're not familiar with MULN Automotive, ticker symbol MULN, this is a penny stock which is also an electric vehicle company that I have been very critical of because I don't think they have proven themselves enough to earn my hard-earned cash in the form of an investment. However, if they do end up proving themselves, then I'm more than willing to invest into this company, but they really need to show proof of concept and they need to show me their ability to scale revenues as well as eventually become profitable. Right now, MULN is surging by over 20% based off of a submission of their 8-K form, which detailed that MULN Advanced Energy Operations, also known as MAEO, has a joint venture with a global EV technology as well as EV technology, which are collectively known as EVT. There's a science officer named Lawrence Harge, who is the founder and chief scientific officer at Global EV, and he made a major announcement on live stream through Facebook. So let's first talk about how this is going to benefit MULN Automotive and what this joint venture is about. The joint venture is to specifically advance a particular device, which is quote-unquote previously known as a battery life enhancing technology, along with EverCharge technology and or energy management module, end quote. Essentially, the technology is focused on improving the overall battery life for various applications, including electric vehicles. Because if you can make a battery last longer, therefore you're going to get a larger range from an electric vehicle that you put the battery in. MULN will own a 51% equity interest, and the other two companies will own the remaining 49% collectively. So this is a very big deal that's going to further MULN's overall battery technology. Also, MULN will pay Lawrence Harge $50,000 and an additional $5 million once quote-unquote definitive agreements are completed with associated intellectual property rights when they are officially signed over to MAEO. I also want to make you aware how there has been an agreement with Saudi Arabia regarding a $10 billion contract. And if you want to read the quote here on screen, feel free to do so. But essentially, this contract will link all of these companies together as well as Saudi Arabia, who also wants this technology for manufacturing purposes. And Saudi Arabia already wants to build a manufacturing plant in Michigan to get this underway. However, MULN officially has not confirmed Harge's statements, although a $10 billion contract and the addition of a manufacturing facility would undoubtedly, according to this article, be beneficial for MULN's MULN stock. So overall, this is very good news for MULN, but we should wait for official sources from MULN themselves before anyone gets too excited. But this would be very good news for MULN shareholders, but for me right now at least, I am going to wait this out until official documents come through and all parties involved agree and start to collaborate together. So far with MULN, they have been a disappointment, falling from around 40 cents per share all the way down to around 10 cents per share, which is what they are trading at right now. Now, I do like how this is good news for MULN, and I am not necessarily against MULN, but I'm very particular in the companies that I invest into, and MULN has not impressed me enough as of yet. But hopefully they can in the future, so I'm going to leave my mind open to it, but I would love to hear your thoughts down below about about MULN. Up next, let's talk about SoFi Technologies, ticker symbol SOFI. And SoFi Technologies, if you didn't know, essentially operates as a digital bank. There has been both good and bad news updates regarding SoFi Technologies over the past few weeks. The good news is that the company is further diversifying their overall business model, making them even more fundamentally solid, stable, and resilient. And that's exactly what shareholders want during this very volatile time. However, there is some bad news regarding how the Supreme Court recently had a ruling regarding student loans, and this ruling was very problematic for SoFi Technologies and their shareholders. According to MarketWatch, the Supreme Court allowed a $6 billion student loan debt relief plan to go through for 290,000 borrowers. You all already know how I personally am against this student loan forgiveness. I myself have student loans from obtaining my various degrees, but I understand that I am the one who signed the contract, therefore I should pay back my debts. I don't even want the government to pay off my debt because it's mine, and I especially don't want taxpayers to pay off my debt either. Because why should somebody else have to pay off my debt which I signed up for? It's unfair and unjust for me to expect other people to step in, or other parties, to clear my debt in this instance. Therefore, I am more than willing to pay back my student loans, and I won't even file for forgiveness. This news of the $6 billion student debt relief plan moving forward has put negative pressure on Sofi Stock, to where bears believe the company could fall below $5 per share. The reason why this would be detrimental for SoFi Technologies is because originally SoFi Technologies was a student loan refinancing company, and they still get revenue to this day from refinancing student loans. But clearly this is going to take a large portion of their market away from SoFi Technologies, because now people either don't need to or are less incentivized to refinance their federal student loans with SoFi Technologies. So we're going to have to see how the story continues to develop overall, but this news update is not good for SoFi Technologies. Even though the Supreme Court has dealt a very catastrophic blow to SoFi Technologies, it doesn't mean that SoFi Technologies is a bad investment. For instance, SoFi at this point is so well diversified that they have loads of revenue streams coming from other segments and sources. They are in no way reliant on this segment any longer, and they have evolved out of it, even though it would be good for the student loan moratorium to end and for these debt relief plans not to go through. However, even if they were to go through and be solidified, SoFi Technologies is still a fundamentally solid company, and thanks to their overall stability and resiliency, SoFi has differentiated itself from other banks which have failed in 2023. So overall, I still like SoFi Technologies, and I think if it drops below $5 per share, that would be a good buying opportunity as long as you are not already overexposed too heavily to this company. I myself only have a 4% allocation to this company, and I will not exceed an initial 5% allocation to this company, because anything beyond that would be improper risk management, because then I would be taking on unnecessary risk of potential losses. There are so many other great investments out there, and I don't want to have SoFi make up the majority of my portfolio, because not only would that be bad risk management, but the opportunity cost is way too expensive in my opinion. But overall, I'm still bullish on SoFi Technologies, and I can't wait for the company to surge at the end of 2023 or beginning of 2024 once they become profitable, so always make sure to look out for that. Lastly, let's talk about some great news regarding Tesla, and Tesla is an electric vehicle company which also specializes in energy storage as well as energy generation. Cathie Wood has been one of the prominent outspoken investors in Tesla, and she believes the company could literally surge up to $2,000 by 2027. Cathie Wood recently bought up around 256,023 shares of Tesla on April 20th, worth around $42.7 million. And this came directly after a quite negative earnings report from Tesla, to where their share price is only trading for around $165 as of right now. I clearly think that Tesla will recover very aggressively throughout the rest of the year, and Cathie Wood is trying to pick up shares while they are cheap. But Cathie Wood didn't just invest into Tesla, she also bought more shares of Roku, Beam Therapeutics, as well as Ginkgo Bioworks, which is another fantastic penny stock that I also have some exposure to, and I do not even like penny stocks. Now, she did also sell a few companies, which would include Shopify as well as Exact Sciences. Now, she didn't sell out of these companies, she just lowered her overall exposure. So clearly there was a trade-off here, but by buying and purchasing more Tesla shares, as well as Roku, Beam Therapeutics, and Ginkgo Bioworks, this shows a huge positive development in what investors can anticipate going forward for Tesla in particular. I think right now is a great buying opportunity for Tesla, because buying on weakness sets you up for long-term success. And if you can find a fundamentally stable company such as Tesla, over the long term, you will make your money back. At least that's the thought anyway. So how did Cathie Wood calculate her price target of $2,000 for 2027 regarding Tesla's TSLA shares? Well, this is based off of a $5 trillion market cap. She believes Tesla could be a $5 trillion company by 2027, and I do think this is quite aggressive. However, even her bear case, which is the negative case, comes in at $1,400, and her bullish positive case comes in at $2,500. I do think $2,000 and $2,500 are rather overly positive, but even if we take her worst case scenario, which is what I gravitate more toward, which would be $1,400, the TSLA share price has loads to catch up on. Literally, the company could almost 10x by the end of 2027. So clearly, she is extremely bullish and positive on this company, and I do have to agree with her that Tesla is a fantastic long-term buying opportunity right now, because Tesla, in my opinion, will become the #1 company by market cap in the entire world. But we will just have to wait and see when that prediction actually comes true, if it even comes true. But I would love to hear your thoughts down below on not just Tesla, but also MULN as well as Sofi Technologies. For more stock news updates just like this one, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.